Hi there and welcome to another video in which I will test if a trading strategy that is presented on YouTube is actually any good. This time I'll test a strategy that uses two RSI indicators to determine the entry signals to go long or to go short. So let's go right ahead after the intro. The source of this strategy is this YouTube video that claims that these settings never fail, and it's impossible to lose with this strategy. Now these are very bold statements and we will soon find out if this is really the case. The link to that video is in the description. And there are actually three different types of entry signals presented using three different indicators. Therefore this time I will make a three-part video series about this single source. Now let's determine the entry and exit rules of the first suggested trading strategy. And in this case the RSI indicator is used for determining the signals to go long or short. We will add two RSI indicators to our TradingView screen first. And then we will set the short RSI length to 5 and remove all the visuals except for the RSI itself. Now this RSI will detect pullbacks in the market for entry moments. And the long RSI, will get a length of 21 and all other visuals are removed as well. This length will determine the overall market trend. For TradingView users it is necessary to merge the two different indicators into one by first moving the short length indicator to the longer one and then also make both use the same scale. Now for long trades the rules are as follows. The RSI 21 should be above the center line for overall bullish market trends. Then wait for the RSI 5 to get below the center line, because this is the first signal that a pullback occurs and an entry signal can get generated. And then if the RSI 5 gets above the center line again and also crosses above the RSI 21 line, then a long signal is generated. The expectation is that the trend will continue and we will extract money from the market by doing a long trade entry. Now the short rules are reversed. The RSI 21 should be below the center line for overall bearish market trends. Then wait for this RSI 5 to do a pullback above the center line. And then when the RSI 5 gets below the center line again and also crosses below the 21 line, a short signal is generated. And the expectation here is also that the bearish trend will continue and we'll do a trade and wait for the exit signal to occur. And this is also where the problem lies, because exit signals are not presented in the original video. Now this is a bad and a good thing at the same time. On the first hand we don't know how the claim of the video can be verified, but on the other hand we now have the freedom to use our best exit signals to determine the rest of our trading algorithm. I had a plethora of exit ideas and tested some of them out, and in the end it seems that riding the trend seems to have the best results, which is actually logical if you come to think of it. And to find out if this strategy is really any good, I created both a Python script for my backtest engine to automatically backtest, and also a TradingView strategy script to visualize this on the charts. Now both the Python code and the Python scripts are downloadable from my Patreon site for patrons, and not only will you support my work by becoming a patron, but I also have other benefits for you as well, like a ton of blog posts about trading and backtesting, but you have also access to my ebook about algorithmic trading for beginners, which you can also buy on Amazon of course. And for those European people that are searching for a reliable MyCar licensed trading platform, Bybit.eu is becoming one of the largest centralized exchanges that is allowed to provide cryptocurrency services to European citizens. If you want to get an additional welcome bonus, then click on my affiliate link in the comment section below or use Get Bybit to sign up. Now getting back to the backtest results, by using the backtesting engine I could really figure out if trading this strategy on multiple pairs would be any beneficial. And it certainly was, because as it seems at the moment, the strategy produces the best results on the 4-hour and 1-day time frame. Now if I upload the backtest results to my backtestanalyzer.com site, we can really see what is going on and how it creates such results. Now the bad news for this proposed strategy is that it does not hold up to its promise to never fail, because it fails and fails often. Only 21% of the trades are winners in this case. But the profit factor and the mean profit managed to still make it a profitable strategy in the end, but at a great cost. Also the drawdown curve does not make me optimistic about this proposed trading strategy, because the last drawdown took very long to recover, and I think I would certainly have stepped onto another trading strategy in the meantime to get these gains back again. Now as I said, I also coded this trading strategy into a Python script for TradingView to make it more visually. And also the hope to also find the best entry and exit signals. And if you add this strategy to the chart, you can not only set your quick and long RSI periods here, but you can also select which entry mode suits the best for your pair, like standard rules that include a pullback or just a crossover between the two RSI indicators. And you can also set the way you exit the trade. For example here using a risk to reward setting, but you can also choose between two other types of exit strategies. Here following long trends or doing aggressive trend following, and everything is explained in the Pine Code. So to give you an example, for Bitcoin, to make the most out of this trading strategy, I have to use the standard entry mode, use a long trend following system, and then also disable the risk to reward take profit settings. So we are really going to ride the trend here. And you can see here that this strategy is clearly biased to do long trades, and the expectation is that this will also perform well in the future, but with a really low win rate. So to make the best out of this system, you really have to stick to your rules and do not deviate from them at all. And to conclude with this first proposed trading strategy, the claim that this is impossible to lose with this strategy should be interpreted with a certain point of view, because you will lose a lot of trades, but if you stick to the strategy itself, in the end your trading account might win. But this all depends on which pairs you are trading and the market circumstances you are trading in. And I'd be lying if I were to say that I am going to use this strategy, but maybe you like it and want to test it out in the future. And by all means be my guest. You can download the Python and PyScript code from my Patreon to test this on your preferred trading strategies. Now for me, I will start testing the second proposed rule that will involve the CCI indicator. And I promise I will come back soon with the trading results. For now this is it, and I will see you in the next video. Goodbye!